You should begin to think about selling if you couldn't first buy what you have today. So people say there's no such thing as, oh yeah, there's reason to hold. But if you couldn't put one new penny, even if it was found money, because you think the price is too high, why are you holding it? Who's going to come along and pay even more for it? Somebody stupider than you? That's what you're basically saying to yourself. So, could I go out today and first, and I'll get to you where I am personally as well, but I'm talking in general now, general opinion, advice, whatever you want to call it. Could you first go out, Pete, and get people loaded up in $3,800 gold as you did at $1,300, $1,600, even $2,000? The answer is no. You still think gold can go higher? Yes. I think it has to go to 4,000 before there's any real meaningful corrective nation. And that's just a psychological number. There's a gold fixed index annuity now that has only a 5-year requirement hold, and it's 11% capped, which means if gold goes up through 11%, you get it all. After that, the annuity gets it, but zero loss protection. And by the way, I think making 11% on gold for the next 5 years would be phenomenal. Anyway, those are the type of things that Timmy specializes in, fixed annuities and all. And then for those of you in the U.S. who are involved in junior resource stocks, First Securities Northwest, Ben Johnson, the founder, I think has been in the business 50 years. Between him and his partner, JD, no one knows more about junior resource stocks than they do. But they're dinosaurs because people aren't using, they'll go to a money manager, but they won't seek help in the place where they really need help, in the junior resource stocks. I'm going to provide you his contact. I have zero with them. There's nothing. The only thing I may get in Christmas time, they may send me some Christmas package or something. That's my total compensation. But that's someone you should have if you have a serious position, and they follow greatly and aware. JD has a relationship with Michael Gentile directly as well. So it's just a good person for you to have. And don't be afraid to pay half or 1% of your assets to have somebody as that counts in a tough market, the junior market. Unfortunately, I don't have anybody in Canada. I know because there's a lot of followers in Canada that I could say to you, hey, contact that person. I just don't. And then, of course, overseas, I have even less.
In this space, niche expertise matters. For example, in the U.S., some advisors specialize in junior resource stocks, small mining explorers, and early-stage projects. One firm, Securities Northwest, with decades of experience, is often cited as a go-to for serious investors in this sector. Their relationships with players and long track record could offer insights otherwise unavailable. While conventional investors may shy away, those deeply committed to gold and metals often benefit from having a specialist in their corner, even at a modest advisory fee of 0.5 to 1%.
Connection. So that's pretty well it. So you'll notice the change. I will start focusing more on financial planning and things related to it, and de-emphasize the metals and go from there. So while I have you, I was going to make another video. No, let me just do it all on this. Now let me talk about where we are on the markets and all. So, oh God, when was it? I don't know when we were at 1,200 and 1,300 on gold, but it was at least 6-7 years ago. And boy, it was like the Maytag repairman. There was not, other than the few people that are always, permabulls that are out there. It became to the point where at the end of 2021, I can't emphasize this enough. It was a very hard decision, and only one client followed it to the letter, and that was I sell all stocks and bonds and own gold for capital gains. That was it. If you've been following me long enough, you know you heard that ad nauseum. Okay? And originally it was to go through 2024. I said for the next 3 years, back then, gold, in my view, will outperform both stocks and bonds. And bonds will lose money, and that's what really should be. You don't lose money in bonds. You go to bonds not to lose money. That was basically what I heard. They did. The bottom line is I then extended it through this year with gold. Now, there are clients, and that's who I'm focusing on right now. There are clients who have bought as low as 1,300. The majority of clients who bought definitely bought under 2,000, and then there's some people that started buying after it went up. Then, of course, there's a whole host that went into mining shares and juniors, and it'd be very hard not to have triple-digit gains at this point in time.
Over time, many commentators who once emphasized metals trading have begun to pivot. The narrative now leans more toward holistic financial planning, asset allocation, and risk management, rather than pure speculative metal exposure. That evolution reflects the need to balance growth with stability and to reduce concentration risk. Today's voiceover suggests prioritizing diversifiable strategies, with gold or commodities playing a supporting role rather than the center. This shift helps make planning more resilient to shifting markets and aligns advice with clients' broader financial goals.
I can tell you this statistically, gold outperforms stocks and bonds as we speak today from the end of 21. In fact, gold has outperformed stocks and bonds since the new millennium. And statistically, going back to 1980, it's even outperformed bonds from that point in time. That's how fantastic gold has been as an investment. And what has it been basically called, especially 5 years ago when the Bitcoin nuts came out? Oh, get rid of your gold. Put it all in Bitcoin. Gold is a relic. Gold is that. It's outperformed. Now, the Bitcoin nuts, they'll see this and they'll send the messages and all that. They told, oh, it's up 100-something thousand%. Yeah. How many people had it when it was selling for $5 or $10? How many people came in only in the last 5 years who paid $40,000, $50,000, $80,000, $100,000 for it? What did they make? And now everybody, I can't tell you, everywhere you go. There was a guy up to $1 billion as a target, 100 million it's going to, millions easily and all. It can't even get past the 125,000. Don't get me started. The bottom line is, couldn't have picked a better investment vehicle than gold. Now, in an industry, which I'm still on the fringe of, even though I'm just insurance licensed, but I speak about markets and all, you're only as good as your last call. Okay, Mr. Grandich, that's great. You did that. What can you do for me today? That's what basically people say if they don't even say it directly to you. They say it without saying it. I've had a long-standing comment. Clients notice. One of the biggest complaints you heard throughout the years, not directed at me, but just in general to the investment community. Hey, you guys and girls on Wall Street, you always tell us when to buy, you never tell us when to sell. And I always had a simple answer. It's important today as any time I've said it before.
Gold's recent performance bolsters the appeal of gold-linked instruments. From 2000 through mid-2025, bullion has appreciated by roughly 1,075%, averaging about 10.9% per year. In 2025 alone, gold is experiencing one of its strongest rallies, driven by inflation fears, central bank demand, and macro uncertainty. Over long spans, though, equity markets have often delivered superior returns. Stocks have historically outpaced gold over multi-decade horizons. The key, gold shines in turbulent or inflationary phases, not always over the long, steady trend.
You should begin to think about selling if you couldn't first buy what you have today. So people say there's no such thing as, oh yeah, there's reason to hold. But if you couldn't put one new penny, even if it was found money, because you think the price is too high, why are you holding it? Who's going to come along and pay even more for it? Somebody stupider than you? That's what you're basically saying to yourself. So, could I go out today and I'll get to you where I am personally as well, but I'm talking in general now, for general opinion, advice, whatever you want to call it. Could you first go out, Pete, and get people loaded up in $3,800 gold as you did at 1,300, 1,600, even 2,000? The answer is no. You still think gold can go higher? Yes. I think it has to go to 4,000 before there's any real meaningful corrective nation. And that's just a psychological number. I think silver has to go to 50 before there's any chance of a stalling or a major downturn. But 3,800 to 4,000 is another 5%, 10% for silver. Do I want to take somebody that's in gold at 1,200 and 1,300 and risk another 5% when it could also peak here and maybe correct 10 or 20%? That's the decision you have to make if you own gold. Now, if you own gold, for the reasons I didn't, I owned it primarily for capital appreciation.
One practical mindset: only hold what you'd be comfortable repurchasing today. If a position no longer feels compelling at current prices, consider scaling back. That translates to using a disciplined sell strategy, either by price triggers or scheduled sell downs. This combats the temptation to cling to assets simply because you already own them. In markets like junior mining or metals, volatility is high, so layering sales helps lock gains, reduce exposure, and preserve optionality. In effect, you treat upside potential as a bonus, not a guarantee.
I don't own it. I didn't own it because I don't own it anymore. I'll get to that in a minute. Because, oh my God, I wanted to have something so my family can survive while others can't. Or the whole world's going to come to a heck. Money's going to be useless, blah, blah, blah. Go. I did not own that in any serious manner. I owned it because I thought I could buy it at this price and sell it at that price. Okay? If you think those things are possible, then yes, you should hold on to it because it's not a matter of capital appreciation. It's a matter that you have it to offset some of the concerns you would have for the future. That's an individual decision. There's guys that have always been talking about the end of the world and involved in the metals market. Like a broken clock, I guess they can be right twice a day. The bottom line is, if you got in it for capital appreciation, I don't think the risk reward any longer favors reward. I still think we can get to 5,000 over the next couple of years, especially if the BRICS and all what I have been talking about continue and they introduce formally a gold back, some type of trading pattern. I think eventually the United States may have to use its gold to sell its bonds. So it can get to 5,000. I think that's a legitimate number now. Okay. But even at 5,000, it's 35% from here. It's no longer triple digit gain opportunity for me.
At present, the narrator no longer holds physical gold solely for speculative upside. Instead, exposure is grounded in hedging concerns and diversifying risks when gold is one piece among many. That said, silver and selected junior positions remain on watch, especially when underlying fundamentals or technicals align. The overall approach is pragmatic. Use indexed annuities or structured vehicles with built-in constraints, focus on planning, and avoid over-reliance on one theme. With gold at new highs, the risk-reward balance has shifted. Prudence now matters just as much as conviction.
So the risk-reward is becoming more balanced when it used to be, to me, so much reward and very little risk. That's my thinking, and I implemented that thinking, so I don't have any more physical gold for capital appreciation, nor am I holding any so I can get the last loaf of bread that may exist if everything goes wrong. All right? Silver. You know it. I was never a silver bull until earlier this year when we broke under 30. And then I said, man, silver's got to be owned in the same way. So now, those who bought right there in the 30 area at 46, that's 50% in less than a year. Can it go to 50? Absolutely. Is there a chance to go to 100? Absolutely. But that's a double only. And I feel confident in some stocks that I own can at least double as well. So, again, using the same premise that we used on gold, if you think you're going to need it because of problems and everything, hold on to it. If you bought it just for capital appreciation, do what I'm going to suggest for both gold and silver. Now, consider this. You can talk with Dave and the team. If you happen to own it with Timmy, you're on your own, you're outside the United States. I think the prudent policy is this. And I don't like cookie cutter, but in this case, I think it's a reasonable starting plan for most. Use a scale up sell process. Now, people, what does that mean, scale up? Either you choose by a price level or a time level to proportionally sell a portion of your metals at certain price levels or at certain dates. I think most people should use price levels.